Good morning. You're watching a home broadcast of Business World Live. I'm Dani Laurel. It's June 1st, 2020, 10:30 a.m., an hour into the trading day this Monday morning in Metro Manila, where the bulk of our country's economy is waking up to the new normal. And that, of course, is our top story. Metro Manila transitions into a more relaxed general community quarantine today to resume economic activities, but experts are divided on how quickly the local economy will rebound from the COVID-19 crisis. NEDA Acting Chief Carl Kendrick Chua says he is expecting a V-shaped recovery this 2020 as more businesses reopen due to the easing of quarantine rules. But Union Bank's chief economist Carlo Asuncion said the pacing of the recovery may be sluggish as activities will remain lackluster because people are still mandated to follow the physical distancing rules. Ateneo School of Government's Ronald Mendoza said the economy's rebound would depend on key factors such as the health system's capacity to prevent a bigger wave of infections, as well as on the mindsets of consumers, investors, and the general public. Mendoza said the government is only halfway in reaching its target to conduct at least 30,000 tests per day, and the date remains unclear if the Philippines has already flattened the curve. GDP shrank by 0.2% in the first quarter when the entire island of Luzon was put on enhanced community quarantine on March 15th and ended 2 months later. Credit rater S&P Global Ratings is also forecasting a deep slowdown in the economy this year because of the pandemic. S&P sees the economy to contract by 0.1% in 2020. It was a downgrade from an earlier estimate of a 6% growth, but it does say it sees a strong recovery in 2021 to 9%, as it points out the government's track record of fiscal prudence. S&P has maintained its BBB plus long-term credit rating for the Philippines with a stable outlook. It says it mirrors the stability of the local economy and the capability of the government to settle its debts. Meanwhile, inflation likely remains stable in May as 17 economists polled by Businessworld yielded a median estimate of 2.2%, which was unchanged from the month of April. Analysts say a rise in food and oil prices were the major upside risks for the May inflation. CPI data will be released on June 5th. Checking in on the markets, guys, welcome to the other side of the floor, let's say. So trading is percolating right now, as we did mention, but also the physical trading floor in the Philippine Stock Exchange will be opening as well. You've actually got PSE President Ramon Monzon saying that they were able to execute a very productive online trading the past couple of months, but says that it's actually time to instill more confidence for people by allowing them to open their physical premises. Now, there will be, of course, safety regulations, temperature checks, masks will be required, and also just a one trader per booth policy versus 2 to 3 traders per booth before, but still trading hours will remain short. And let's take a quick peek here at my terminal. You're going to be seeing us pulling back that major rally. We are down by 0.4%, but still well above, firmly above 5,800 at 5814.74. This, of course, as we open period. So just to remind our viewers here how we ended the week on Friday, a lot of optimism there. We closed at 5838.84. That's actually up by 4.82% in just one day. And actually, on a weekly basis, we were up by 5.4%. In terms of value turnovers, there was so much trading last week that surged by 121%. And also the good news is our net foreign outflows. So I'm going to pull out the chart for you so you can see how our, we did see that on the right part of my chart here, a huge spike in net foreign buying after 16 straight days. And even, before the 16 straight days, a huge amount, basically more than 1 month of foreign selling. So we actually see these outflows going down. It was down by 34% last week to an average of 230 million pesos on the back, of course, of overseas investors finally buying into our markets, close to 1 billion pesos on Friday. This is the highest we've seen, since you can see in my charts here around Feb and that halted all of these outflows and did help the index round about a 2.4% gain monthly. But it is important to remind our viewers here, it's not all rosy. We've still got a lot of sectors wary about the decision of opening the economy. You've got local COVID-19 cases still on the rise. The health department, for instance, said there were 17,224 COVID-19 cases as of Saturday. You've got close to 12,500 still active. And so there's a lot of that. The Friday actually saw a record rise in the number of cases, the highest since the data was collected in January. And this is what's prompting Papa Securities' Manny Cruz to be very cautious. And he says this optimism in the markets might fizzle out once it is seen that consumer appetite might not be there, and also infections are still on the rise. In fact, he does see a pullback towards the 5,200 levels in the near term. Let's take a look at some stocks to be watching today. Of course, a lot of anticipation on what's going to happen to the airline carriers, especially as flights start reopening. And you're going to be seeing here Philippine Airlines actually extending the double-digit gains that it had seen on Friday. That's up by 6.11% in just 1 hour of trade. Cebu Pacific as well up by 8.2%. This amid the fact that, they had actually announced a reopening of flights, but the Civil Aeronautics Board had instructed them to cancel all the flights as per today. The IATF has yet to approve the proposed routes for the domestic air services, at least for this first week. So still not operational, at least in terms of the commercial flights. But you've got AirAsia saying they will be operating 18 domestic commercial flights. They are resuming on Wednesday, June the 3rd. Cebu Pacific originally said it will be resuming tomorrow, so we'll see whether that's going to be continuing. And PAL is now going to be resuming on Monday next week. So that's going to be June 8th instead of June 1st. Recall that these airlines have been one of the most battered sectors here. PAL saying total pandemic losses are topping $1 billion. Now let's take a look, however, at one of the biggest ralliers we've seen all week, and that was actually Pure Gold. You can see it actually pulling back or paring back those major gains. It's opening down 0.3%, but still it's nothing compared to how it performed on Friday. That was the top actively traded stock last week, and you can see just this rise in terms of since the lockdown actually started. It's just been on the rise there. There were around 4.4 billion worth of shares exchanged just last week. Year to date, it's up by 14.9%. And analysts are saying that is on the back of the earnings that they had released on Friday, but also because it was upgraded in the MSCI to the big stocks index, replacing Security Bank. Now, just a quick peek on those earnings that I was mentioning. They did say on the back of stronger than expected sales, their sales rose by 17.4% to 40.95 billion pesos, and their net income was up by 16.8% to 1.76 billion pesos. They mentioned there was actually higher consumer spending going on and pantry loading even prior to the lockdown, and also a lower inflation environment this year. Regina Cap is very positive on that, saying it can still achieve a high single-digit to low double-digit sales growth because of the store expansion, but does warn there will be some challenges. Disposable incomes, of course, might be taking a hit. And I just want to show here on my terminal what analysts are saying about Pure Gold, which is, of course, just one of 3 stocks in the green year to date. You can see the consensus here is seeing 15 buys out of 16 analysts. They're seeing a target price of at 52 pesos. Okay, so it's actually trading at 45.80. So there's still a little bit of upside there to go for the analysts. So we will be checking in on that stock and on other sectors later on in the broadcast. Okay, let's check in on headlines we're watching this Monday morning. Now, after implementing more than 2 months of a lockdown and handing out billions of pesos in government cash subsidies, the Philippines is still one of the countries in Asia offering the smallest fiscal package. This is according to Nomura. You can see on your screens here, the Debt Watcher cited data from the Asian Development Bank that the country's fiscal response was only at $20 billion as of mid-May, or about 5% of our GDP. This is actually among the lowest in the region, together with China and Indonesia. The government has so far rolled out a 200 billion peso cash subsidy program for 18 million low-income families, as well as over 51 billion pesos in wage subsidies for small business workers. A sluggish distribution of SAP benefits, however, haunted most LGUs during the period of strict quarantine measures in Metro Manila and nearby provinces. The Philippine Star reports that about 400,000 poor families are still waiting for their 5,000 to 8,000 peso government dole-out. The cash aid program is mandated under the Bayanihan to Heal as One Act, which is set to expire on June 24th. Malacanang is now seeing a 3-month extension to special powers granted to the President Duterte under the Bayanihan to Heal as One Act. Congress, however, is set to go on break later this week, included in the pending bills are the 1.3 trillion peso COVID-19 recovery package and the proposed CREATE Act. Looks like we will not be feasting on buffets anytime soon. The trade industry, or the Department of Trade and Industry, said that restaurants are not allowed to offer buffets once they actually resume the dine-in services. It is expected to take a hit on some hotels as well as restaurants that base their business models on all you can eat, as it offers higher average bill per customer while minimizing service and inventory costs. The DTI's guidelines also indicated that restaurants should put up table partitions and mark the floors to ensure proper social distancing. A no mask, no entry policy is also prescribed, and dining tables and chairs must be sanitized after each use. Limited dine-in operations will only be allowed in areas under a modified general community quarantine. Now, as we've mentioned, eyes are on the CREATE bill, or the Corporate Recovery and Tax Incentives for Enterprises. Now, as for the outsourcing industry, they are appealing for a longer transition period before the shift to a new incentive scheme. The Information Technology and Business Process Association of the Philippines, or the IBPAP, wants a 5-year status quo on incentives before the 2 to 9 year transition to a new scheme. The group says this is to counterbalance serious uncertainties brought about by the pandemic. IBPAP also said new investors and locators should be offered at least 10 years of incentives to help the Philippines compete against other countries. The CREATE bill seeks to cut corporate income taxes to 25% from 30% as early as July. Before this, the Sitira sought to slash the tax rates lower to 20% gradually over the span of a decade. Despite the appeal to lengthen the transition time, IBPAP is still backing the CREATE bill, saying it would help attract foreign direct investments here into the country. That measure is still pending in the Senate. As companies cautiously re-emerge from the ashes, the transition into this new normal will take some time. We have been holding a number of discussions lately with technology firms, and of course, with very good reason. These are pivotal in the period. Now, to add to that rich discussion, we have with us Arunangshu Chattopadhyay. I hope I'm saying that correctly. He's, of course, the director of Power Product Marketing and also the head of Central Technical Support of Asia of Vertiv. Thank you so much for joining us on the broadcast, sir.
Good morning. Good morning, everybody.
Good morning. Now, Vertiv is a huge company, and you've been doing this for many years in many companies. It is, New York Stock Exchange listed in terms of critical IT infrastructure. Can you describe, though, in better terms, what you mean when you say right IT infrastructure for the pandemic and the companies that are experiencing these issues right now? How can you say that a company is getting it right?
That's an interesting question. We are in a very, very different scenario right now. It is very unfortunate circumstances. The coronavirus pandemic has really accelerated the drives of age infrastructure, which means instead of working from home, now all of us are working from, instead of working from office, working from home. It's not only the workers, but also the students. They are also doing online classes and everything, which is actually driving a 40% downstream data traffic, which makes us really be, it is important for us to be having a solid IT infrastructure. What do I mean by solid infrastructure? It can be segregated into three major areas. One is definitely security, connectivity, and business continuity. These are the three things what we dwell on.
Okay, so security, connectivity, and business continuity. I mean, you've been consulting for big companies even before the pandemic. Can you say with confidence that a huge percentage of companies were actually ready to be able to make this IT digital shift during this time period, or were they caught unawares? What percentage of companies actually are getting their IT infrastructure correct?
In fact, this has been in any IT infrastructure organizations. These three are the main factors which companies are really investing heavily on this. Security is a prime thing. Definitely, there are, even during the pandemic situation, there will be bad actors who will be trying to search for ways to take this advantage. Not only this area, but also in various area to get into the security of an organization. So people are really into this, and there are connectivity issues all the time. People have been investing, organization even in Philippines. The telecommunication providers are investing heavily into building the connectivity, because these are the main things by which we are connected to the world. So, of course, whenever we are connected, the business continuity takes a major step, because you have to have your infrastructure running, you have to have your IT equipment running all the time to make sure the continuity of the process is already maintained.
Okay, sir, we've had other people on the show, and a lot are very focused on the data part of the IT and the security part, as you mentioned. But there's also what you're saying actually is the IT infrastructure health. It's in this sense, it's very physical. You've got the cooling, the servers, power, and you've got, as you mentioned already, in the country, some issues, or whether we have the physical infrastructure needed to run a very healthy IT system. Can you tell us how companies can monitor their IT infrastructure health?
There are various ways to monitor and manage the IT infrastructure health, looking at different things, how every servers are working, how the power system, which is driving the servers, making the servers online, running, has to be working continuously. And whenever the servers are running, it is generating heat, to make sure those heats are tackled well in advance, to make sure this does not get overheated and does not stop working. So it's a latency is very important in the whole world, and that is how continuously this IT equipment running is very vital in this current scenario. You need to monitor not only after the fact, but before any bad things happen. You need to understand it's going to happen. That's what is called monitoring and management system, which people are investing heavily and trying to make sure their infrastructure set up and running.
Okay,
Predictive maintenance is one of the biggest parts in this game.
okay, so two dimensions here: the IT infrastructure physically and maintaining that, and the internal processes. We've had data that there's been a tremendous amount of increases in cyber attacks during this coronavirus pandemic globally. Do you foresee this continuing, or do you see this, abating anytime soon? What should we be expecting? How can companies be prepared? And is it any worse or better here in the Philippines?
It is very much there. It was there, and at this critical moment when people are working from insecure network, sometimes with VPN or without VPN, we are more vulnerable. That is why secure KVM switches, remote monitoring softwares, which gives administrative visibility of the workings which is happening, that gives a more solid infrastructure. Equipments are being monitored, and the organizations are really investing heavily on this. It's not just because of this pandemic. It has been an operation for a long, but even with this pandemic, the requirement become more critical.
Is it actually a realistic dream, or a realistic scenario to have reliable, uninterruptible operations here in the Philippines right now, given, as you mentioned, we have issues on the slower internet speeds, we still have some power interruptions, but also on the bright side, we actually have a huge amount of very digital people that are, a lot are in Facebook. There's a huge penetration of mobile phones. How can we harness this mobility versus the, let's say, unreliability of the infrastructure?
So the investment is happening. You have seen the telecommunication organizations in the Philippines. They're investing heavily. The new telecommunication company is also venturing in. So as you grow, more and more data centers will be established within the Philippines with the world class standards, which will make it more solid. Vertiv is part of that partnership with the organizations to make sure this IT infrastructures are solid.
And how can, what do you suggest for the telecom providers actually to improve right now? You've been consulting for different countries all over the world. To what extent can we actually improve countries in at least ASEAN?
Philippines is growing definitely, but in the data center and IT infrastructure perspective, it is still not at at the peak. There are organizations in Singapore and other countries which is really is a destination of data centers. In Philippines also many organizations are developing infrastructure so that they can attract more organization to set up their data centers and have the collocation in the data centers there. So it is happening. We are still not at the peak, but definitely there is a ongoing, which makes it more resilient, that we can definitely come back and address these issues in the data center industry.
Okay, sir, one last question before I let you go. What about the small and micro, and medium-sized enterprises? The Philippines is actually, in terms of number, it's actually 99.6% of our industry, and the big companies can probably afford all of this IT infrastructure. What's your suggestion to the smaller businesses? What's the new normal for them when it comes to digitization and IT?
That's a very good question. In fact, with this current new normal situations, the age infrastructure is becoming more and more important. Because age infrastructure is more and more important, the smaller industries need not overlook the importance of these critical factors as I talked about: security, connectivity, and business continuity, which used to be, and I have a laptop or I have a computer having some UPS is being fed up. That's not the situation anymore. Your connectivity to the outside world is very important. So to make this happen, it's not only the small organization, but the whole ecosystem has to work together. The IT companies, the connectivity providers, and the security providers, they have to work together to make sure this ecosystem runs efficiently.
Okay, so it's more about the ecosystem rather than the size, or the type of business that is in place. And we hope to catch up with the rest of the countries in Asia in terms of IT infrastructure, and also availability of all of these internets and power that we need to support the new normal. Thank you so much. That was, of course, Arunangshu Chattopadhyay. He's the Director of Power Product Marketing and Head of the Central Technical Support of Asia from Vertiv. Thank you, sir, for joining us.
Thank you.
Okay, guys, back to markets. I have several things to break. I'm going to be pulling out the PMI index first. You can see that on my screens here. Take a look at that. We had this major plunge since the start of the year. We finally have the May manufacturing figures. That is 40.1. Now, 40.1, anything that is below 50 actually signals a contraction. So we did contract compared to the previous month. But our contraction was less severe than the contraction that we saw in the month of April. So in the month of April, we actually contracted, our score was actually at 31.6 in terms of the PMI. Now, this comes after we actually had the Chinese data over the weekend showing an expansion, so above 50, but still a continuing bumpy recovery. Now, I just want to take a quick peek on our global markets here and how we have performed. There's so many geopolitical issues going on in the United States. Recall that you've got protests being staged across the United States, angry over the death of George Floyd in Minneapolis. They have returned to the streets in New York yesterday for a third straight day, and you can actually see the equity markets in the US fairly mixed, still tilted towards the upside. Let's take a quick peek at Asia Pacific and how the rest of the region is opening. We happen to be bucking that uptrend because the rest of Asia seems to be in a very positive mood right now. You're going to be seeing Japan, the Nikkei 225 up by 1.2%. But take a look at China. Shanghai and Shenzhen in particular up by 2.5%. The Hang Seng up by 3.3%. So a lot of this manufacturing data did come out over the weekend, and we are expecting other data from the rest of the Asian countries to be entering today. Now let's take a quick peek at our sectors here. I just want to see whether we are actually improving in terms of the trading day and which ones are lifting us up. Take a look at that. You've actually got mining and oil up by 3.3%. Industrials as well, actually leading the chart. So we've reversed quite well. We're actually now in the green, up 0.6% from opening in the red earlier on this morning. There's just one sector sitting that out, and that is services, down by more than 1%. I do want to focus on one particular sector here, and that is the property space. So much debates going on about the future of this sector. And the latest to happen is about the POGO closure. So this from David Leechiu, he's a property analyst, of course, telling the Philippine Star that both office and residential businesses are at risk of losing substantial revenue should the POGOs close shop. Now, he does call it a perfect storm for the property market. Now, what happened as of late for the POGOs? As a precondition to their partial reopening during this GCQ or MGCQ, the BIR has actually issued a circular requiring all of them to first show proof that they have paid their 2019 franchise taxes, corporate income taxes, as well as withholding taxes. And so far, according to them, no POGO has been able to comply, and thus nobody has actually been able to reopen. Now, big question there, can the other traditional businesses actually take up the office space being left by the POGOs for free? According to SM Prime's Jeffrey Lim, BPO companies might not be able to actually easily get that office space because of the fact that they require PEZA certification, which many buildings which are occupied by POGOs right now don't have. So it's not very likely that they can just be replacing POGOs. And you can see here on my year-to-date chart, the property space has been badly hit. It's down 31%. Let's just take a look at the one-day period here and see whether that news has been affecting them. You can still see a very mixed picture here. Smaller players still leading the charge. Santa Lucia, for example, and Vistaland. Another bright spot, however, for the property space is the REIT scenario, and now they're still pushing for that. Offshore investors are actually now being invited to avail of REITs via the Bangko Sentral. So they will be allowing non-Philippine residents to invest in the REITs. So these are, of course, real estate investment trusts. And they can actually avail of the full and immediate capital and the remittances by using the Bangko Sentral. Now, recall, you've got a couple of companies here. That's Double Dragon, which is up 3.5%, and Ayala Land with pending applications for the REITs, and waiting for the markets probably to settle down before they can actually issue that. I just want to take a quick peek at our banks here. before we end the broadcast, another one that has been in focus lately because it did surge on Friday. That was actually the most in 2 months that we've seen the banks surging. And also BDO was actually what lifted the index on Friday. That surged by 9.5%, the most in the index. Take a look at BDO now, paring back those gains down 2.4%. But take a look at Security Bank, which was heavily sold off. Recall that we had mentioned this had been replaced by Pure Gold in the MSCI Big Cap Index. It's actually being picked up right now. Recall that the BSP cut the reserve ratio requirement yet again, and that is of course injecting liquidity into the system. So we can actually see the financial space enjoying a bit of that bump up by 0.7% this June 1st. And that's the first look into the business day. Today is June 1st, 2020. Catch us again tomorrow morning. That's 10:30 a.m. I'm Danny Laurel, and we are One News.